In our first two lessons, we introduced the concept of the accounting equation, and we used 5 cases to apply this accounting equation in the recording of financial transactions. Now what we want to do is understand what accounting is, and as Albert Einstein asked,
"What is time?" A deceptively simple question, yet it is the key to understanding relativity. It is also the reason my hair is going grey.
we also have to ask what accounting is. So the first question which weighs upon us in this lesson is, what is accounting? Now, to understand what accounting is, we first have to appreciate that accounting consists of 2 basic activities. So which are these 2 basic activities? Firstly, we have recording, and we also have reporting. So these are the 2 activities which accounting consists of. So accounting consists of these 2 activities. If we understand what these activities are, then we can have our hand on understanding what accounting really is. So we are going to kick off by understanding what really are we talking about when we are talking about recording. If you remember from our first 2 lessons, we were recording the financial transactions using the accounting equation. We were looking at how assets, how equity, how liabilities are affected by a financial activity. So when we talk about recording, basically we are saying this is keeping a physical record of every transaction, as we illustrated earlier on. We are keeping a physical record of every transaction. But we need to elaborate on this. What do we mean? What we mean is we are actually looking at how assets, equity, and liabilities are affected by financial transactions. So we are looking at what happens to assets, equity, and liabilities. In essence, we are looking at what a financial transaction does to the accounting equation. So recording can also be called bookkeeping. So recording, it is also called bookkeeping. And because it is called bookkeeping, that means, or that is, the people who do recording, they're actually called bookkeepers. So bookkeepers do recording. What then is this recording? What are we going to define it as? So recording or bookkeeping, in essence, bookkeeping, this is, you are keeping a day-to-day record of the effect of every transaction. Business dealings are called transactions because they are always two-way. We have 2 parties which are participating in the exchange of goods and services. So a bookkeeper, through the process of recording or bookkeeping, is going to keep a day-to-day record of the effect of these transactions. But how is he or she going to keep this? He or she is going to use the accounting equation. That's why we said we are looking at how assets, equity, and liabilities are affected by transactions. So this sums up what is recording. Now let us consider what reporting is. So now when we talk about reporting, we are saying it is accountants now who do this. So accountants do the reporting on records and present them in a particular way so that they can be used or they can become useful. And what are they used for? To make financial and non-financial decisions. So this is a full-length description of reporting. Firstly, reporting is done by accountants. So many people confuse this. Many people think accountants are the ones who do recording, bookkeeping, that is keeping record of financial transactions in books of accounts like cash books, ledgers, journals, etc. That is recording, that is bookkeeping. What accountants do actually is reporting. Reporting, what are they reporting on? They are reporting on the records which have been presented and prepared by bookkeepers. So accountants take the reports from bookkeepers and then they present them in a particular way so that these records become useful to the owners of a business and other stakeholders to make financial and non-financial decisions. So in business, we need to make decisions. What should we buy? What should we sell? How much should we sell? At what price should we sell? Etc. These financial decisions or non-financial decisions, like when it comes to sustainable goals, how can we positively impact the society around us? How can we promote initiatives that benefit the community around us? Financial and non-financial decisions. In order to make informed decisions, the owners of a business, they need a working knowledge of the financial position of the business. And this is going to be the work of accountants, taking records from bookkeepers and reinterpreting them or presenting them in a particular way that is helpful to the owners, because the owners might not be as much educated in things to do with business. If you hand them over the record of the transactions, they might not be able to interpret them. So they hire accountants who are going to then redesign in a way or present these records in a way which is digestible to them. So when we tally or compare recording and reporting, we are going to find out that bookkeeping, which is recording, it's simply making records. But accounting, which is reporting, ensures the usability of these records, the usefulness of these records. The other thing we should also know is this: Accountants do offer financial statements and financial reports. So we are going to learn more about these financial statements, but I just want to be preemptive. There are mainly 4 financial statements which we are going to be concerned with. We are going to look at what is called the statement of financial position, but others call it a balance sheet. So we have what is called a statement of financial position. We are then also going to look at what is called a statement of comprehensive income. We are going to look at what is called a statement of change in equity. Then lastly, we are going to look at statements of cash flows, or a statement of cash flows. So for the ease of reading, we call the statement of financial position, we actually abbreviate it as SOFP, statement of financial position, SOCI, statement of comprehensive income, SOCE, statement of change in equity, and lastly SOCF, statement of cash flows. So this is what we wanted to learn when it comes to understanding what accounting is. I hope you now have a working knowledge, or rather you can now distinguish between reporting and recording. You now know the difference between a bookkeeper and an accountant. You now know what are the roles of an accountant and the roles of a bookkeeper. You are no longer having the confusion which many people have, assuming that accountants are the one who do the recording of financial transactions. No, accountants actually do the reporting of financial transactions. In our next lesson, we are going to look at the objectives of businesses. So that is what we want to focus on, the objective of a business or businesses. There are 4 questions I want you to try to answer. I do not want you to provide bookish answers to these 4 questions. I want you to provide answers which are relatable to you. What I mean is the answers you give shouldn't be researched out. These should just be answers which are intuitive to your own reasoning. The first question, we are going to be focusing on these questions in our next lesson. We want to answer, what is the primary objective of a business? What do you think is the primary objective of a business? Is it to help people? Is it to make profit? Is it to make money? Is it to pay its employees a living wage? What really is the primary objective of a business? After attempting to answer this question, the second question is going to be, can a business have other objectives? So you have stated out what you think is the primary objective of a business. Then you have to answer the question, can a business have other objectives? Question number 3, who cares whether a business achieves its primary objective? So who cares? That's the question. Then for our number 4, who is the final user of financial reports? We said the job of an accountant is to present financial records as financial reports so that they can be readable and usable in making financial and non-financial decisions for a business. But who is this final user of these financial reports? And how does this tie back to the objectives of a business? So that is going to be our primary focus in our next lesson. Have a blessed one. Then, of course, if you find any way you do not understand in how we presented this lesson, or if you have other contributions on how best we can present our lessons, you are free to do so in the comments section. If you find these lessons helpful, it would be a good thing if you consider subscribing so that we can grow our traction on this platform and others who need help in accounting might encounter these videos. Thank you.